Hello, welcome to Capital Market Live on Channels Television. I'm Laddie Williams, and this is the first one for the month of September. Well, so much happened in the month of August in the global capital markets. So today, we'll review how your money performed in August and what to expect in September. Well, let's head on to global markets now. European stock markets closed mixed. That was Friday after a key U.S. job report showed higher than expected new non-farm payrolls, along with a rising unemployment. We see the DAX there, that was down about 0.67%. The FTSE 100 on the flip side was in the green, 0.34% up, while the CAC 40 there index, that was up marginally, about 0.06%. Let's move on to Asia now. We see Asia Pacific markets were largely traded higher there as China's factory activity for August expanded and the central bank announced a cut in reserve requirements to boost the economy. The Nikkei was up about 0.28%. While the Shanghai Composite there, that's up 0.43% at 3,133 points, while the Hang Seng Index stayed unchanged. To the U.S. now, the Dow Jones Industrial Average rose on Friday as traders weighed the latest U.S. jobs report to conclude a winning week. The Dow Jones Industrial Average, that was up 0.33% to close. The S&P 500 was up 0.18%, while the NASDAQ there, that was marginally down 0.02% to close. Well, let's bring in Olumide Additional now for analysis, financial market analyst. Hello, Olumide. How are you doing?
I'm fine, Lati. Good evening.
Fantastic. Great to have you, Olumide. So how do you see U.S. stocks' performance in the month of August?
Well, it's been a very interesting session. If you recall that the month of August has really shown stocks at their all-time high. If you look at stocks like Google, MasterCard, Walmart, Dell, they broke their new high on the fact that they expanded their value chain. You see that the bottom line remains rock solid. Look at a company like Google. Alphabet has a net cash position of more than $118 billion, and they're pretty much even looking at way to monetize away from advertising. If you look at Google Maps, they're having a kind of partnership with energy firms on how to sell data, which experts say would yield about $100 million. You look at Dell just on Friday got to their record high, and pretty much that was because of the fact that we saw corporate discipline and cash flow growing to put the stock near the $70, and we could see Michael Dell's net worth hitting close to the $70 billion mark. So it's been a very interesting session. Particularly for tech stock, you look at likes of Apple, looking at some point to break over the $3 trillion mark again after hitting that point some weeks back. Microsoft also breaking over the $325 mark with a market valuation of $2.44 trillion. And, you know, not just tech stocks, Walmart also recently broke its all-time high. The bottom line is that investors are keen that the relationship with Flipkart, one of the major players in India's e-commerce space, would really be some value to the world's largest retailer. So I think it's been quite interesting, but exposure to China's risk has really weighed on certain stocks like Disney, Nike, and property stocks. At some point, we saw energy stocks fluctuating at the start of last month, but right now they're in the green with oil prices hitting the highest level since February. So, yeah, it's been some form of interesting in the market, but I think for financial stocks, it's not been so interesting with Moody really downgrading some key stocks, particularly the regional banks, and that was because of their debt position in the market. If you look at treasury bonds right now, they're not doing so well in the last 3 years, and many of these banks have position in that. So liquidity really plays in, and we see that Citibank among the top banks have lost about 11% this month. So I think all needs to be played for in the month of September, but definitely investors are really in a good mood, Lati.
Yeah, I can imagine investors having fun right now in those U.S. markets. But I guess finally we have some bad economic news in the U.S. Showing the economy is feeling the rate hikes, we've had in the past. With unemployment rate that was higher at 3.8%. Do we see rate cuts coming anytime soon in the U.S.?
Well, that's quite tricky. That's quite tricky because 3.8, if you look at it compared to emerging market, I think that's still pretty much strong data. You look at retail data, you look at housing data, you look at consumption. I think the US economy is fair to say that it can still take in some rate hikes. And that's why the market is pricing that probably the US Fed, after a speech at Jackson Hole, might really put in rate into the play. But, September is really a month known for the worst performing time for US stocks. Pretty much school season begins. Investors really tend to look at the last part of the year to reposition their assets. So we might see some sell-ups, but I don't think to be a smart move to bet against the bulls right now. Michael Burry's 1.8 billion short position against the US stocks right now will be at record loss because the US stocks right now are firing at all cylinders, Larry.
Right, and in the US, which stocks do you see shining in the month of September?
Well, I mentioned earlier Alphabet all-time high, Dell all-time high, MasterCard all-time high, Walmart all-time high, NVIDIA all-time high. Pretty much, I think what we might see is that the bottom line of stocks with high cash net positions and really value ecosystem might continue to play in. But I'm particularly looking at stocks that didn't really perform so well, that have Asian position. If you look at JD, for example, Nike and Disney, these are stocks that really have good fundamentals, but because of what is really happening in China are really way down. I think the tables might turn. They have more upside than the stocks really trading at all times. So I think I'll really be watching at Meta and Eli Lilly, another top range stock for the month of September, Ladi.
Right, so much to look out for the U.S. Stocks there. Thank you so much, Lumide Additional Financial Market Analyst. Thank you.
Thanks for having me. Yeah.
All right, now let's take a look at some news stories amid headlines right here in Nigeria. We see foreign investment in Nigerian stocks experienced a significant decline last month. That was in August, reaching its lowest level since President Bola Tinubu's market reforms triggered a substantial rally. Data from the Nigerian Exchange Limited reveals that the total value of stocks purchased by foreign investors that dropped by 9.45 billion naira from 22.72 billion naira in June. And in July, foreign investors also offloaded stocks worth about 31 billion naira compared to an outflow of 23.02 billion in the previous month. The surge in foreign inflow into Nigerian stocks in May reached about 27.51 billion, was attributed to the market's substantial rally following the announcement of petrol subsidy removal by President Tinubu. However, in July, foreign participation declined, possibly due to uncertainty in the foreign exchange market and profit-taking. This increase in foreign participation is reflected in decline from 11.51% in May to 5.77% in July. All right, now let's take a look at what happened in the market this week. In the trading week ended Friday, September 1st, Nigeria's equity market rose by 3%, by 1.08 trillion naira, as investors bought banking, consumer goods, and oil and gas stocks. In the latest market update, there was a significant surge in trading activity, as a total turnover of 2.86 billion shares valued at 37 billion naira changed hands in 33,968 deals. This marked a notable increase compared to the previous week, when 1.812 billion shares worth 29.29 billion were traded in about 31,000 deals. To the sectoral performance now, you see banking there closed the week up 5.11%. Consumer goods, that was the big winner, up 7.58%. Industrial goods, 1.98% up. And insurance, that added about 0.8% for the week, while oil and gas was up 5.36% for the week. All right, now let's review the market. Now, joining me right now is Dr. Omobola Adu, investment research analyst at AfriInvest. Great to have you on the show.
Yeah, same here, Ladi.
Fantastic. So, looks like investors had a good time in the market in August. But we see year to date, the index is up about 31%. How do you see performance in the market?
Yes, nice to be here, Ladi. Can you hear me clearly, please?
Yes, I can hear you clearly.
Okay.
So, I was saying that, it looks like investors had a good time in the market, that's in the Nigerian market there, for the month of August. And we see the index is up about 31% year to date. Tell me how you've seen the market performance in August. Hello, Mobola. All right, we'll try and get Mobola back on there. Looks like we're having some issues with him. All right, let's look at the some other news there. We see Nigerian Exchange Limited is eager to collaborate with the Lagos Chamber of Commerce and Industry to advance advocacy efforts and promote listings and enhance capacity development. Temi Popola, the CEO of NGX, expressed this intention during the 135th year anniversary of LCCI on August 31st. Mr. Popola emphasized the potential for NGX and LCCI to work together to promote the benefits of listings for non-listed companies. Mr. Popola also highlighted NGX's plans to leverage technology to engage millions of Nigerians in the stock market, drawing parallels with the banking industry's success in digitization and fintech collaborations. The NGX is prepared to partner with fintech firms to increase retail investor participation and is committed to building a thriving market that offers innovative solutions for issuers and investors. Mr. Michael Olawale Cole, president of LCCI, expressed enthusiasm for collaborating closely with NGX, commending the exchange for its achievement, affirmed LCCI's commitment to working together to enhance the NGX operations, including the development of action plans and timelines for a more robust partnership in support of sustainable development of the Nigerian capital market. And to regulatory matters now, with the Corporate Affairs Commission commencing the process of striking off companies that did not comply with the provisions of the Companies and Allied Matters Act 2020 from its register, businesses will now have to comply with new rules. Take a listen.
This system allows the owner of the business to register the company himself. But one of the conditions is his name must appear as one of the directors or one of the owners or one of the partners. So the first thing you need to do is to create an account on the company registration portal if you're a public user. When you create the account, you apply for the name. Name approval is done the same day. So if you apply for a name, you get it the same day. Once that name is approved, you can proceed to provide the information about your objects. You don't need to submit articles of association. The articles are there for you to adopt. You can adopt the model articles depending on the type of company you have, or you can modify those model articles. Once you do that, you fill out the forms. The forms tells us who you are, your name, your address, your date of birth, and other particulars about you and all the other shareholders and directors, the number of shares taken by each director, the address of the company, the beneficial owners of this company. Once you do that and you submit, payment is made electronically, and the system is integrated with the stamp duty portal of the Federal Revenue Service. So you stamp these documents seamlessly, and within 24 hours, I can assure you.
All right, we'll take a break now. When we come back, we'll get an update for what to expect in the month of September in the markets. That's in a moment. Just stay with us. Welcome back. So watching Capital Market live on Channels Television. Well, let's get a sense of what's going to happen in the market in the month of September. Let's try and get back Dr. Mobola, investment research analyst at AfriInvest. Let's try it again. Mobola, can you hear me? Hello, Dr. Mobola. Fantastic. Yeah, so I hear you now. So as I said before, it looks like investors had a good time in the market in August right here on the NGX. How are you seeing the performance so far? We're up about 31% year to date.
Yes, that's just like you rightly mentioned, Ladi. The Nigerian equity market has been bullish, right? So it just went up for the fourth consecutive month, up about 3.4% on a month-on-month basis. Most interestingly, the equity market has just hit a 15-year high, closing roughly around 66,500 index points, right? And what we're seeing in the market is a combination of several factors, right? Notably, we recall that over some months back, due to some of the new reforms implemented by the new administration, foreign investors are becoming more open, looking at the Nigerian market more keenly. And we know that in terms of total transactions on the bourse, as at looking at just what happened between January up until July, based on available data, the market total transactions are close to over 2.2 trillion. As at this same period last year, the market had just done over about 1.7. So we're seeing renewed interest in the market by investors, also looking at it in terms of market stimulating activities. We've been seeing lots of corporate actions. Notably, we saw Dangote Sugar coming up with an announcement of proposed merger between the sugar business, rice, as well as the salt and seasoning, that's NASCON. We are also seeing, we are basically in earnings season again, where we are having companies coming out with their H1 numbers. So these are some of the things that have picked up investors' interest in the market, corporate actions, earnings season, as well as renewed interest by investors in the market. So because of that, we're seeing the market extending for the fourth consecutive month. Like you rightly mentioned, market doing close to 31% on a year-to-date basis. So it's a lot of good seasons where investors are coming into the market right now.
Yeah, quite bullish. Definitely. I'm sure there's some investors on the sideline who might not have enjoyed, this bullish trend. But do you think, entering the market at this time is too risky, or do you see some kind of pullback coming up soon?
Yeah, so it's going to be a mix of factors, right? So there are some stocks that are looking at where they are currently trading. You still see opportunities for investors that would want to come into the market to make a bit of gains on some selected stocks. So we know that there are some stocks in the market that we consider to be fundamentally sound, even though we know that the Nigerian operating environment has been tough recently in terms of the impact of the FX change in terms on companies' bottom line. But still, we know that this is more likely a short-term pain that companies are likely going to bear. And in the medium to long term, things are likely going to be much better. So for an investor that is looking to take a long-term perspective to the market, there are still opportunities to play around.
Yeah, definitely be great if there's still opportunities there. But we have data there out from the manufacturing sector. We see real GDP growth was 2.20% in the second quarter of 2023, 26.8% decline compared to the 3% recorded in the second quarter of 2022. How do you see all of this impacting, listed companies going forward?
Yeah, thank you. So, so it goes back to like what I just mentioned briefly, looking at the dynamics of the Nigerian operating environment. So the sort of slowdown we've seen on a year-on-year basis in the sector reflects what we are experiencing in the country in terms of the impact of the PMS removal, the fuel subsidies, looking at it also in terms of the exchange rates. We know a lot of manufacturing companies have to do a lot of importation. So basically they are faced with so much of severe pressures. We know that some companies, at least listed companies, in terms of bottom line, recording massive losses, retained earnings and equity basically being wiped out because of this impact. But like I mentioned earlier, these are more or less short-term pains that most of these companies are going to bear. We expect that within the medium to long-term, things are likely going to go back to a more bullish or more profitable perspective for the whole general market.
Right, and know globally investors are watching out, keeping their eyes closely on the central bankers, what's going to happen next with rate hikes. We know the Monetary Policy Committee, they're meeting this month right here in Nigeria. What are you expecting, another hike or maybe a hold this time?
So you just like rightly mentioned, these are like interesting times in Nigeria. Lots of investors, especially foreign investors, are looking out for monetary policy decisions to gain better clarity on the market and the direction of the economy. We know that in the last meeting that happened in July, we saw the Monetary Policy Committee hiking interest rates by about 25 bps and also adjusting the asymmetric corridor. So coming into August, I think we might see a situation where the Monetary Policy Committee might be looking to hold rates, basically to give enough time for some of these changes they've made in terms of the MPR asymmetric corridor to actually reflect on the economy. So it's just been basically over a month with their last decision. So we are most likely to see them hold rates, basically to allow the economy to fully adjust to some of these policies that that they've pushed out within the last meeting.
Right, we'll definitely be looking out for that meeting, and definitely we'll cover it right here on Channels Television. But what are you expecting for stock market performance this month of September?
Yeah, so for the market coming into September, there are a lot of things that are likely going to play out. But in terms of overall picture, we expect we might see a little bit of slowdown in terms of looking at transactions, or possibly that the market might fall just marginally. And there are reasons to look at. For the first one, we expect that investors may be doing a lot of profit taking in the month. Like we rightly mentioned, the market is up 31%. We're seeing, like you mentioned, in the consumer goods space, right? Stocks like Dangote Sugar, Nascon. Dangote Sugar was up over 100% last month. Nascon also did close to 55%, basically linked to plans for the merger and investors positioning ahead of the new entity that will be likely to be listed on the NGX. So we've seen market prices going roughly high, imagine 100% in 1 month. So we believe coming into September, there might be a little bit of profit taking where investors will be looking at taking profit in stocks that have done considerably well. Also, you also look at it in terms of the, earnings season. Like we said, H1 numbers have been coming out. We expect more numbers also in the coming weeks in terms of what we've seen about how the exchange rate has impacted earnings. So these are things that, investors will be looking out to see how companies are going to manage these dynamics and then factor into their expectations for the remaining 3 months of the year. Are companies likely going to beat expectations at the beginning of the year? You can say that that's likely not going to happen based on what we've seen at least for the first 6 months. But in general, we expect that there might be a little bit of profit taking in the month of September, portfolio rebalancing for the big institutional investors. And as a result of that, the markets might just marginally decline in September.
Right, and talking about expectations, definitely we still have that inflation story, right now. How do you see the inflation in Nigeria going forward into the last quarter of this year?
Yeah, so inflation is still likely going to be on the increase. So the factors that have been driving inflation, at least for the better part of this year, have largely been cost-driven factors that have remained, factors that are not likely going to phase out. We know we've seen where PMS prices have been and how that has been impacting businesses. We've seen lots of players in the FMCG repricing their products just to cushion the impact of inflation. So in general, we should still expect that within the last 3 months, inflation should still continue trending upwards, bearing any significant maybe policy reform that could help to address the major factors that are driving inflation in Nigeria.
Right, and I'm sure we have policy reform traders right now in this market. Thank you so much. That was Dr. Omobola Adu, investment research analyst at AfriInvest. Thank you so much for coming on the show today.
Yes, thank you for having me, Ladi.
Right. All right, we'll definitely be looking out for what happens in the market in the month of September. Definitely, there's some caution there from analysts at this point. They're expecting some kind of mixed sentiment in the market. We'll definitely be tracking the market right here and see how it plays out right here on the NGX. Well, that's it today on Capital Market. Thank you for watching. Don't forget to join us next week. And don't forget, you can watch this again on our YouTube channel and Channels Television. Just flip over to YouTube, search for Channels Television. You can watch all our production. Follow us on social media too, and get more updates. I'm Ladi Williams. See you next weekend.